While certainly the crowdfunding provisions have gotten a lot of press and media attention, some of the lesser known provisions that I think are fairly significant are the elimination of the general solicitation prohibition in Reg D for private placements. That's a provision that lawyers and practitioners have stressed over for years in terms of advising clients of what they can and can't say in an offering, which really didn't have much benefit for the protection of investors in my view, since at the end of the day, the offering itself was always prohibited or restricted to professional investors, QIBs or accredited investors. So therefore, the general solicitation requirement, in my mind, added a lot of headaches without really adding much benefit. And it brings the U.S. securities laws much more in line with the international norms and what you see in Europe and in Asia. Some other provisions that have gotten much less publicity but are significant are the elimination of the Sarbanes-Oxley 404 internal audit report by the auditors. That's a provision that many practitioners weren't expecting the SEC to go that far, but it really will amount, in my mind, in my view, to a significant cost savings for companies, as it would cost companies millions of dollars to comply with that. And the threshold that Congress is requesting of $1 billion in revenue is a pretty high threshold. I think a lot of us were surprised that the Congress would be willing to scale back the audit requirements, particularly in light of what's happened over the last decade in terms of investor protection. As you know, in the Jobs Act, Congress has stated that companies that wishing to go public that are emerging growth companies need only comply with 2 years of audited financial statements. I think that that's a provision that certainly in the near term we probably won't see companies availing themselves of. I think that from both a liability perspective as it relates to underwriters and also from what investors will demand, I think that people will still be complying with the 3 years of audit. Over time that may change, but certainly in the near term I expect that underwriters will insist on the 3-year requirement, as will investors.